Coca Cola has long been regarded as one of the world's most iconic brands, and its enduring reputation is built on a legacy of consistent performance, robust financial fundamentals, and an unwavering commitment to returning value to its shareholders. In recent times, the company's performance has reinforced investor confidence, especially as it continues to deliver impressive quarterly results. Over the past quarter, Coca-Cola reported revenues that soared to an impressive $11.5 billion, a figure that not only surpassed analysts' expectations by roughly 7% but also underscored the company's ability to grow even in a competitive global marketplace. In a landscape where many companies face uncertain economic conditions, Coca-Cola's performance stands out as a testament to the strength of its underlying business model. The company has managed to harness both its pricing power and a well-optimized product mix to drive its revenue upward, despite a backdrop of fluctuating consumer demand in certain regions. This robust financial performance is further bolstered by improvements in its gross margin, which has seen a notable enhancement of nearly 2.8 percentage points over the same period last year. Much of this success can be attributed to Coca-Cola's strong presence in its key markets. In North America, which remains the backbone of its global operations, the company generated approximately $4.67 billion in revenue during the quarter, an increase of 15.4% compared to the previous year. Meanwhile, in the Europe, Middle East, and Africa region, known collectively as EMEA, revenues climbed modestly to around $1.76 billion, marking a 2.1% increase. Latin America also contributed positively, with revenues reaching about $1.62 billion, a growth of 7.0% year-over-year. However, the Asia-Pacific region reported a slight decline, with revenues dropping by 1.0% to $1.15 billion. Despite this regional dip, the overall performance remains strong, particularly when viewed against the backdrop of its chief competitor, PepsiCo. In a head-to-head comparison during the last quarter, Coca-Cola achieved a growth rate of 6.4% in total revenue, whereas PepsiCo's figures actually fell by 0.2%. This disparity underscores the effectiveness of Coca-Cola's strategic initiatives. By implementing targeted price increases and refining its product mix, Coca-Cola has managed not only to drive revenue but also to improve profitability significantly. Industry analysts have noted that the company's ability to outperform PepsiCo, especially in key markets like North America and Latin America, demonstrates its superior pricing power and operational efficiency. One prominent research analyst from a leading securities firm commented that while PepsiCo struggled with declining sales in its high-margin Frito-Lay segment in North America, Coca-Cola's core beverage business continued to expand, thus securing its competitive advantage. Looking ahead, the outlook for Coca-Cola remains promising. The company has provided forward-looking guidance that anticipates annual revenue growth of around 5% to 6% and an earnings per share increase of approximately 2% to 3%. These projections are grounded in the company's belief that global consumer demand will remain robust. Despite certain headwinds, particularly in emerging markets where volatility is more pronounced, the long-term trends appear favorable. Developed economies are expected to sustain their consumer spending, and even in regions where economic pressures are mounting, the resilience of consumer demand for Coca-Cola's products should help cushion any potential setbacks. The company's success is built on several key pillars. First is its powerful brand recognition, which has been meticulously cultivated over more than a century. Coca-Cola's brand is not just a symbol of a beverage. It represents a legacy of quality, refreshment, and reliability that resonates with consumers around the world. This intangible asset is perhaps the company's most formidable competitive advantage. Even during economic downturns or in times of market volatility, the enduring appeal of the Coca-Cola brand helps to secure stable demand. Another critical factor is Coca-Cola's global distribution network. The company has established one of the most extensive and efficient supply chains in the world. Its products are available in virtually every corner of the globe, from bustling metropolitan centers to remote rural areas. This vast distribution network not only supports steady revenue generation but also provides the company with the flexibility to adapt quickly to shifting consumer preferences and market dynamics. Coca Cola's financial discipline is also a cornerstone of its success. The company has consistently maintained a healthy balance sheet with strong cash flows, which in turn has allowed it to invest in growth initiatives, return capital to shareholders through dividends and share repurchases, and navigate challenging economic conditions with confidence. Its ability to generate steady cash flow is a reassuring signal to investors, particularly those who prioritize dividend stability and long-term capital appreciation. Dividend stability is one of the hallmarks of Coca Cola's appeal to investors. Over the years, the company has built a reputation for consistent dividend payments, making it a favorite among income-seeking investors. The strong fundamentals and robust cash flow generation provide a solid foundation for continued dividend increases. With its guidance for modest revenue and earnings growth in the coming year, the expectation is that Coca Cola will continue to deliver attractive dividend yields, thereby rewarding shareholders and reinforcing its image as a stalwart investment. Global consumer demand plays a vital role in Coca Cola's growth prospects. In mature markets such as North America and parts of Europe, even though there might be pressures on disposable income, consumer loyalty to the brand remains strong. In emerging markets, despite some volatility, there is a general trend of improving consumer purchasing power, especially in countries like India and China. As these economies continue to grow and modernize, the potential for increased beverage consumption presents a significant growth opportunity for Coca Cola. A key component of Coca Cola's strategy is its focus on pricing power. Over the past quarter, the company successfully raised prices in several markets, a move that not only boosted its revenue figures but also contributed to improved profitability. Price increases, when executed carefully, can lead to a higher margin without necessarily dampening demand, provided the brand remains strong and consumers continue to perceive value in the product. Coca Cola's management has demonstrated a keen ability to balance these dynamics, ensuring that price hikes translate into meaningful improvements in the bottom line. Operational efficiency is another pillar that supports Coca Cola's robust performance. By continuously optimizing its production processes, streamlining its supply chain, and managing costs effectively, the company has managed to enhance its overall profitability. This operational discipline is evident in the improved gross margin figures reported in the recent quarter, a clear indicator that the company's cost management initiatives are bearing fruit. Competitive positioning is a critical aspect of the global beverage market, and here too, Coca Cola has distinguished itself from its main rival, PepsiCo. Recent comparisons have shown that while PepsiCo struggled with a decline in sales in certain segments, particularly its high-margin Frito-Lay division in North America, Coca Cola was able to post solid growth figures in its core beverage business. This contrast is not just a matter of numbers. It reflects the effectiveness of Coca Cola's strategic focus on its core competencies. By concentrating on its beverage portfolio and enhancing its marketing efforts, Coca Cola has managed to secure a dominant position in its key markets. Investors in overseas stocks often look for companies that offer not only growth but also stability and consistent income. Coca Cola, with its time-tested business model and reliable dividend track record, fits this description perfectly. For those seeking a safe haven in a turbulent market, Coca Cola represents a blend of growth potential and dependable cash returns, making it a cornerstone in many diversified portfolios. From an investment perspective, it is crucial to consider several factors when evaluating Coca Cola. The company's extensive history, strong brand, and global reach are all key indicators of its ability to weather economic storms and continue delivering value to its shareholders. In addition, its disciplined approach to cost management and efficient production systems further enhance its appeal as a long-term investment. One of the most attractive aspects for investors is Coca Cola's dividend policy. For decades, the company has not only maintained a consistent dividend payout but has also steadily increased its dividend over time. This reliability in returning cash to shareholders is particularly appealing for income-oriented investors. In an environment where market volatility can lead to unpredictable capital gains, a stable and growing dividend can provide a much-needed source of income and a cushion against market fluctuations. Looking ahead, the outlook for Coca-Cola remains bright. Analysts expect that global consumer demand will continue to be robust, driven by both mature markets and emerging economies. While there may be short-term headwinds, such as regional fluctuations in sales, particularly in the Asia-Pacific area, the overall trend appears positive. With its strategic focus on optimizing product mix, improving pricing strategies, and enhancing operational efficiency, Coca-Cola is well-positioned to sustain its growth trajectory in the coming years. The company's management is confident about the future, as reflected in its forward-looking guidance. The projection that revenue will grow by approximately 5% to 6% on an annual basis, along with an earnings per share increase of 2% to 3%, underscores the belief that the company's core business remains strong. These modest but steady growth expectations provide a clear signal to investors that Coca-Cola's fundamentals are robust and that the company is committed to delivering consistent value. In today's global economy, one of the challenges for multinational companies like Coca-Cola is managing diverse regional markets. The recent quarterly performance shows that while some regions, such as North America, EMEA, and Latin America, have experienced healthy growth, other regions like Asia-Pacific have faced slight declines. However, this regional imbalance is not necessarily a negative indicator. In many cases, challenges in one region are offset by strong performance in another, resulting in overall balanced global growth. For instance, while Asia-Pacific posted a marginal decline of about 1.0%, North America's growth of over 15% significantly bolsters the company's overall performance. This kind of regional diversification is a key strength for Coca-Cola. It not only mitigates risks associated with economic downturns in specific areas but also allows the company to capitalize on growth opportunities wherever they arise. In emerging markets, where consumer behavior is rapidly evolving and purchasing power is on the rise, Coca-Cola's strong brand and effective distribution channels provide a solid platform for future expansion. Even if short-term challenges arise in one region, the company's global reach ensures that it can continue to deliver strong financial results. For overseas investors, understanding these dynamics is crucial. Investing in a company like Coca-Cola means looking beyond short-term fluctuations and focusing on the long-term potential. The company's ability to consistently generate strong cash flows, maintain a solid balance sheet, and reinvest in growth opportunities is what makes it a perennial favorite in many portfolios. The fact that Coca-Cola is expected to continue increasing its dividend is an added incentive, as it provides a predictable income stream for investors. Beyond the numbers and statistics, there is an important qualitative aspect to Coca-Cola's success. The company has a culture of innovation that has allowed it to stay relevant even as consumer preferences evolve. Whether it is through the introduction of new product variants, the adoption of sustainable practices, or the leveraging of digital platforms for marketing and sales, Coca-Cola has shown a remarkable ability to adapt to changing times. This adaptability is another reason why investors are confident that the company will continue to perform well in the future. One of the most interesting aspects of Coca-Cola's recent performance is its ability to increase prices without significantly denting consumer demand. In a world where many companies struggle to pass on cost increases to consumers, Coca-Cola has managed to leverage its brand strength to raise prices, thereby boosting its revenue. This price elasticity is a rare trait in the consumer staples sector, and it highlights the unique position that Coca Cola occupies in the market. The company's pricing strategy is supported by a careful calibration of its product mix. By shifting the focus towards higher-margin products and adjusting its portfolio to meet changing consumer tastes, Coca Cola is able to improve its gross margin even in the face of rising input costs. This meticulous approach to managing the product portfolio is one of the key drivers behind the company's improved profitability. Moreover, Coca-Cola's commitment to operational efficiency cannot be overstated. The company has invested significantly in streamlining its production processes and optimizing its supply chain. These efforts have not only helped to control costs but also ensured that the company can respond quickly to market demands. In an era marked by rapid technological advancements and ever-changing consumer trends, having an agile and efficient operational framework is a major competitive advantage. For investors, all of these factors contribute to a compelling investment thesis. The company's strong fundamentals, coupled with its proven ability to generate cash and increase dividends, make it an attractive option for those looking for long-term stability in their portfolios. In a market where volatility can be high, having a solid, reliable stock like Coca-Cola in one's portfolio is reassuring. It is also important to consider the broader macroeconomic environment in which Coca-Cola operates. Despite various economic challenges, such as inflationary pressures, geopolitical tensions, and shifting trade dynamics, global consumer demand for non-durable goods like beverages remains surprisingly resilient. Even in periods of economic uncertainty, consumers tend to prioritize spending on trusted brands, and Coca-Cola is undoubtedly one of the most trusted names in the world. This enduring consumer loyalty acts as a buffer against economic headwinds and supports sustained revenue growth. Another factor that enhances Coca-Cola's investment appeal is its focus on sustainability. In recent years, there has been increasing pressure on companies to adopt environmentally friendly practices. Coca-Cola has taken significant steps in this direction, from reducing water usage in production to investing in recycling initiatives and sustainable packaging. Such efforts not only improve the company's public image but also contribute to long-term cost savings and risk mitigation. For socially conscious investors, Coca-Cola's sustainability initiatives add an extra layer of attractiveness. In addition, the company is leveraging digital technologies to transform its marketing and sales operations. The rise of e-commerce and digital platforms has opened up new avenues for reaching consumers. Coca-Cola's innovative digital marketing campaigns have successfully engaged a younger demographic, ensuring that the brand remains relevant across generations. This digital pivot is another example of how Coca-Cola is adapting to the modern business environment, further reinforcing its long-term growth prospects. When evaluating a stock for overseas investment, it is essential to look at both qualitative and quantitative factors. Coca-Cola's quantitative metrics, such as revenue growth, EPS improvement, and dividend yields, are impressive on their own. However, when combined with the qualitative aspects, its strong brand equity, operational efficiency, and forward-thinking strategy, the overall picture becomes even more compelling. For many investors, one of the most attractive aspects of Coca-Cola is its dividend policy. Over decades, the company has demonstrated an unwavering commitment to returning cash to shareholders through regular dividend payments. This is particularly important in times when market volatility makes capital gains unpredictable. A steady dividend stream provides a reliable income source, which is a crucial consideration for income-focused investors, especially those planning for retirement. Moreover, Coca-Cola's dividend reinvestment potential should not be underestimated. By reinvesting dividends, investors can harness the power of compounding, allowing their investment to grow significantly over time. This reinvestment strategy has been a cornerstone of wealth creation for many long-term investors who have held the stock over extended periods. Looking at the future, the outlook for Coca Cola is underpinned by several positive factors. Global consumer demand, though subject to regional fluctuations, is expected to remain strong overall. Developed markets continue to show resilient spending patterns, while emerging markets, despite some volatility, are on an upward trajectory in terms of consumption growth. The company's strategic focus on these diverse markets positions it well to capture growth wherever it may occur. Furthermore, the stabilization of raw material costs has played a crucial role in maintaining Coca-Cola's profitability. As input costs become more predictable, the company's ability to manage production expenses improves, which in turn supports higher margins and sustained dividend growth. This predictability is a welcome feature for investors, as it reduces the uncertainty associated with fluctuating commodity prices. Coca-Cola's competitive positioning is another critical aspect to consider. While its main rival, PepsiCo, faces challenges in certain segments and regions, Coca-Cola has managed to outperform in its core markets. The company's ability to consistently capture market share in North America and Latin America, for instance, demonstrates its superior execution and strategic focus. This competitive edge is a testament to the company's commitment to maintaining its leadership position, and it bodes well for future growth and profitability. For overseas investors looking to build a robust portfolio, Coca-Cola represents a safe haven amid market uncertainty. Its ability to generate stable cash flows, combined with its consistent dividend payouts and strong global presence, makes it an ideal candidate for long-term investment. The stock is less volatile compared to many growth stocks, and its performance is less dependent on short-term market swings. This resilience is especially valuable in a portfolio designed for long-term wealth accumulation. Another important consideration for investors is the company's strategic response to changing consumer trends. Coca-Cola has not rested on its laurels; it continues to innovate and evolve. The introduction of new product variants, the expansion into healthier beverage options, and the ongoing efforts to reduce sugar content are all examples of how the company is adapting to the growing consumer demand for healthier lifestyles. These initiatives are not only critical for maintaining relevance in a rapidly changing market but also for ensuring that the company's revenue streams remain diversified and robust. The role of digital transformation in Coca-Cola's business strategy is also noteworthy. In today's digital age, traditional marketing channels are no longer sufficient to engage consumers effectively. Coca-Cola has embraced digital technologies to enhance its customer engagement, from social media campaigns to targeted online advertising. By leveraging data analytics and digital insights, the company is able to tailor its marketing efforts to the preferences of different consumer segments, further strengthening its market position. In addition to its operational and strategic strengths, Coca-Cola also benefits from a favorable industry outlook. The global beverage market, despite challenges such as changing consumer preferences and regulatory pressures, remains one of the most resilient sectors. People will always need to quench their thirst, and brands like Coca-Cola, which have a storied legacy and deep emotional connection with consumers, are well positioned to continue thriving in this environment. For overseas investors, these factors collectively create a compelling case for including Coca-Cola in their portfolios. The company's strong fundamentals, consistent performance, and commitment to returning value to shareholders through dividends all point to a stock that is likely to deliver stable returns over the long run. Moreover, in an era of economic uncertainty, having a stock with a proven track record and a stable dividend can serve as a reliable anchor for any diversified portfolio. It is also important to note that Coca-Cola's management team remains focused on long-term value creation. The leadership has consistently demonstrated a willingness to invest in growth opportunities while maintaining a disciplined approach to cost management. This balanced strategy has allowed the company to not only weather short-term challenges but also to capitalize on emerging opportunities in new and existing markets. The company's investment in sustainability initiatives further enhances its long-term prospects. In today's world, environmental, social, and governance (ESG) factors are becoming increasingly important for investors. Coca Cola has made significant strides in reducing its environmental footprint through initiatives aimed at water conservation, sustainable packaging, and waste reduction. These efforts not only improve the company's public image but also contribute to cost savings and operational efficiencies, which in turn support long-term profitability. Looking forward, the prospects for Coca Cola appear bright. Analysts remain optimistic about the company's ability to sustain its growth trajectory, driven by both strong underlying fundamentals and a clear strategic vision. While some regions may face short-term challenges, the overall global demand for Coca Cola's products is expected to remain robust. The company's focus on innovation, efficiency, and sustainability will likely enable it to continue delivering solid financial performance and steady dividend growth. For those considering an investment in overseas stocks, Coca Cola offers an opportunity to invest in a company that has demonstrated resilience, adaptability, and a commitment to long-term growth. Its track record of stable earnings, strong cash flow, and reliable dividends makes it a standout choice for investors seeking both income and capital appreciation. Over the long term, investors in Coca Cola can expect not only the potential for regular dividend payouts but also the benefit of reinvesting those dividends to compound their returns over time. This strategy has proven effective for many long-term investors who have built significant wealth by consistently reinvesting dividends in high-quality, blue-chip stocks. Moreover, in an increasingly uncertain global economic landscape, the stability offered by a company like Coca Cola is invaluable. While many companies face the risk of declining consumer demand or operational disruptions, Coca Cola's diversified product portfolio and extensive distribution network help insulate it from such risks. Whether the economy is booming or facing a downturn, the company's performance has historically remained relatively steady, providing a safe haven for conservative investors. For those who may be new to overseas investing, it is advisable to approach investments like Coca Cola with a long-term mindset. The focus should be on the company's fundamental strength and its ability to generate consistent returns over decades, rather than on short-term market fluctuations. One effective way to gain exposure to Coca Cola and similar high-quality companies is through exchange-traded funds, ETFs, that focus on global consumer staples. These ETFs offer a diversified approach that reduces the risk associated with investing in a single stock while still providing the benefits of stable income and growth. Another important aspect for investors to consider is the importance of staying informed. Regularly reviewing the company's quarterly reports, listening to earnings calls, and keeping up with industry news are essential practices that can help investors make informed decisions. The dynamics of global consumer demand, fluctuations in commodity prices, and changes in regional market conditions all have the potential to impact Coca Cola's performance. By staying informed, investors can better anticipate these changes and adjust their portfolios accordingly. While the focus of this discussion has been on Coca Cola's performance and outlook, it is also worth noting the broader trends in the global beverage industry. Despite challenges such as evolving consumer tastes and increasing regulatory scrutiny regarding sugar consumption, the beverage sector remains one of the most resilient industries in the world. The demand for refreshing beverages is a constant, and companies that can innovate and adapt to changing consumer preferences are likely to continue thriving. Coca Cola, with its legacy of innovation and a proven ability to reinvent itself, is well positioned to capitalize on these trends. For investors seeking exposure to a company that not only has a storied history but also a clear path for future growth, Coca Cola represents an attractive opportunity. Its ability to generate strong cash flows, maintain a healthy balance sheet, and deliver consistent dividend payments sets it apart from many of its peers. This stability is especially appealing in times of market volatility, where the assurance of regular income can help mitigate the risks associated with equity investments. The company's commitment to sustainable practices also plays a significant role in its long-term appeal. As ESG factors become more important in the investment decision-making process, companies that demonstrate environmental and social responsibility are likely to receive greater support from investors. Coca Cola's initiatives in water conservation, sustainable packaging, and waste reduction not only enhance its reputation but also contribute to its operational efficiency and cost management. In this way, sustainability becomes a driver of profitability, further reinforcing the company's investment merits. In summary, Coca Cola's strong fundamentals, global brand recognition, and stable dividend policy make it an enduring and attractive investment option for overseas investors. Its ability to adapt to changing market conditions, combined with a disciplined approach to cost management and a commitment to sustainability, provides a solid foundation for long-term growth. For investors seeking a balance of income and capital appreciation, Coca Cola stands out as a reliable choice amid a complex and sometimes unpredictable global economic landscape. Over the coming years, as global consumer demand continues to evolve and markets shift, Coca Cola's performance will be closely watched by investors around the world. The company's ability to maintain its pricing power, optimize its product mix, and manage costs effectively will be critical factors in sustaining its growth trajectory. At the same time, its robust dividend policy will ensure that investors continue to receive steady returns, even during periods of economic uncertainty. For those who are considering adding Coca Cola to their investment portfolio, it is important to approach the stock with a long-term perspective. This means focusing on the company's underlying fundamentals and its ability to generate consistent cash flows over the long haul. By reinvesting dividends and maintaining a diversified portfolio, investors can harness the power of compounding to build wealth gradually and securely. It is also essential to remember that investing in overseas stocks involves understanding not only the company in question but also the broader economic and market conditions. Factors such as currency fluctuations, geopolitical developments, and global economic trends can all have an impact on the performance of stocks like Coca Cola. Therefore, investors should stay informed by regularly reviewing financial reports, listening to earnings calls, and following expert analyses. This ongoing due diligence will help ensure that investment decisions are based on a comprehensive understanding of both the company's strengths and the challenges it may face. For investors who may be new to the world of overseas stocks, it can be beneficial to seek the advice of financial professionals or to invest through funds or ETFs that provide exposure to a broad range of quality companies. This approach can help mitigate some of the risks associated with individual stock picking while still allowing investors to participate in the stable growth and dividend returns that companies like Coca Cola offer. In conclusion, Coca Cola's robust performance in the last quarter, its strong global presence, and its effective cost management and pricing strategies all point to a bright future. The company's commitment to sustainable practices and its disciplined financial management further enhance its appeal as a long-term investment. For those seeking stability, steady income, and reliable growth in their overseas portfolios, Coca Cola represents an exemplary choice. The key takeaway for investors is that a company with such solid fundamentals and a proven track record can provide a cushion against market volatility and economic downturns. Coca Cola's ability to generate consistent cash flows and to increase dividends steadily over time is a testament to its resilient business model. As global consumer trends continue to support the demand for its products, investors can look forward to both capital appreciation and regular income. Ultimately, the success of Coca Cola as an investment is a reflection of its enduring brand, operational excellence, and strategic foresight. Even as markets evolve and competition intensifies, the company's focus on innovation, sustainability, and efficiency positions it well to continue delivering value to shareholders. Investors who recognize these strengths and maintain a long-term perspective are likely to benefit from the stability and growth that Coca Cola offers. Before making any investment decisions, however, it is crucial to conduct your own research and consider your individual financial situation and goals. While Coca Cola is a beacon of stability in many respects, all investments carry risk, and it is important to have a diversified portfolio that can withstand the uncertainties of global markets. As we wrap up today's discussion, remember that the essence of sound investing lies in understanding the fundamentals of the companies you invest in, staying informed about market trends, and maintaining a disciplined, long-term approach to wealth building. Coca Cola, with its decades-long legacy and continued commitment to innovation and shareholder returns, is a prime example of a company that can weather economic storms and provide steady, reliable returns over time. Thank you for listening to today's analysis on Coca Cola. We hope this comprehensive review has provided you with valuable insights into the company's strong fundamentals, its impressive recent performance, and the promising outlook for stable dividends in the future. Whether you are a seasoned investor or just beginning your journey in overseas stock investing, understanding the story behind this iconic brand can help you make informed decisions that align with your long-term financial goals. In the end, investing in a company like Coca Cola is not just about chasing short-term gains. It's about building a foundation of stability and reliability in your investment portfolio. With its consistent revenue growth, sound cost management, and unwavering commitment to returning value to its shareholders, Coca Cola stands as a beacon of enduring success in the ever-changing landscape of global business. We encourage you to take these insights and consider how they might fit into your own investment strategy. Stay informed, remain patient, and remember that a long-term perspective is often the best approach to achieving financial security and growth. We look forward to bringing you more in-depth analysis and valuable investment tips in our future videos. Thank you once again for joining us today. We hope this analysis has been helpful and that you now have a clearer understanding of why Coca Cola continues to be a standout in the global market, offering not only strong fundamentals but also the potential for long-term dividend growth. May your investments be prosperous, and may you find the stability and growth you seek in your financial endeavors. This concludes our detailed look at Coca Cola's performance, fundamentals, and future outlook. We appreciate your time and attention, and we look forward to seeing you in our next video, where we will continue to explore the world of overseas stocks and investment opportunities. Have a great day and happy investing.